Hello, I'm Emilie Bellet, founder of Vestpod and author of You're Not Broke, You're Pre-Rich, and you're listening to The Wallet. Every week we bring you the best tips, guidance, and a good dose of inspiration to help you manage your money better. Today's episode is about credit cards, why they often feel manageable at first, and how they can quietly turn into long-term debt. I am joined by Iona Bain, an award-winning broadcaster, columnist, author, and podcaster specializing in personal finance. She's joining us following a recent Panorama investigation, Maxed Out the Credit Card Trap, which looks at how easy credit, rising interest rates, and minimum payments are keeping millions stuck in debt during the cost of living crisis. Together, we unpack how credit card products are designed, why debt can linger for years even when people feel responsible, and how to spot when something that feels manageable is quietly becoming a problem. A quick reminder, we are not financial advisors, and this podcast and all the information provided on Vestpod and The Wallet is for educational purposes only. Iona, it's so nice to have you on the show today on The Wallet. You've spent months investigating credit cards for Panorama. Can you tell me, for those who haven't seen the documentary, what is the credit card trap?
Sure. And before we begin, I should probably make it clear that what I'm going to say today is very much my opinions, and those are separate from the BBC. I'm a freelancer, and that's what I need to say up front. So, the credit card trap is a situation whereby people will take out credit cards with the best of intentions. They may use them to get consumer protection, they may use them to borrow for very specific purposes, or they may use them to build up their credit score over time, perhaps to get a mortgage further down the line. These are all perfectly sound reasons to have a credit card. But what happens is life gets in the way. Sometimes people have massive life events like a divorce, a bereavement, or the loss of a job, or their everyday costs creep up in a way that isn't their fault, but means they no longer have control over all their outgoings. And that means their debt starts to creep up. They spend more and more on the credit card. And what started out as a product that they could manage can over time become one that spirals out of their control. And when that happens, it can have absolutely devastating consequences, not just for their finances, but for their mental health as well. So that's the credit card trap that we were exploring in the Panorama documentary.
We're here to talk about 35 million people in the UK have a credit card, and many of those people do use their credit cards in a way that suits them. Why did this story feel especially important to tell right now?
There are many people who are drowning in debt. So, about 2.8 million people in the UK have what's called persistent credit card debt. And definitions vary, but I think most people in the industry who use this term are referring to folks who are, at the very least, only keeping up the minimum repayments on their credit cards and are doing that over the long term. And that is usually a big telltale sign that somebody is not on top of their credit card debts and that they are now in a situation where they're just treading water, and they may never pay off their credit card debts unless they take proactive action. And that action is often quite difficult because it requires going to your lenders and asking for forbearance, going to a debt advisor or a debt charity and getting a debt solution in place, and sticking to that debt solution over many years, which can involve quite massive sacrifices and a big drop in your quality of life. These are very difficult decisions that face people once they do get into chronic credit card debt or persistent credit card debt. And that is why many people find themselves trapped in that situation for years.
And we'll look at what you can do if you're in this situation in this episode. But before, in terms of the documentary, anything that really surprised you, or you started your investigation and you were like, oh wow, this is actually much bigger than what I thought.
Yes, there was one particular aspect of the credit card industry that I was shocked by. I was aware of the fact that credit score providers serve two roles. One role is to help the public understand what their credit scores are so that people can improve them. So hopefully they can get, more credit further down the line and at better interest rates. But they also act as a broker for the credit card industry. And that can sometimes create a situation where somebody who has signed up for a credit score provider to essentially get their finances back on track, having been in lots of debt, may find towards the end of that process, having worked really hard to pay off that debt, they then start getting a lot of emails from their credit score provider encouraging them to look at new credit card deals. That's concerning because those people may not be in a position to take out new debt again. They may just be getting their finances back on track. And the last thing that they need, probably at that time, is to take on a new credit card. So I was shocked by the volume of emails that people in that situation were receiving. And it does raise questions about whether we need to be more mindful of people who have been in credit card debt and to give them more space as they come out of that situation so that they can get their lives back on track.
When someone is using a credit card, they think that if they're paying the minimum interest, that's going to be enough for them to be, financially healthy. Can you comment on that?
Minimum repayments are one of the biggest credit card traps out there because it lulls people into a false sense of security. People will often take out a credit card and start by paying off the balance in full, perhaps because they're not spending that much in the beginning, but because of a combination of human psychology and the credit card company's very clever strategy, they will see something called a minimum repayment on their letters that they receive from their credit card companies or their credit card statements that they view online. And they will perceive that minimum repayment as being an acceptable amount to pay back. And this is known as anchoring. It's a well known psychological phenomenon. When a number is suggested to you, it will influence you. And in this case, if someone suggests that you only have to pay back the minimum amount, then because that is much easier than paying off the balance in full, why not do that? Now, it is explained on credit card statements that this won't um, help you pay off your credit card debt, that this will prolong your debt and make it more expensive in the long run. But I don't think people still understand what the real long-term cost of it is. And depending on, how little you're paying off each month and how big your debt is, we're talking about potentially years, if not decades of debt as a result of this one simple decision to only make the minimum repayment each month. And if people understood the full scale of that decision and what it means for their finances in the long run, I think lots of people would think twice if they had the ability to pay off more. And that's the difficult thing. Lots of people can't necessarily pay off more than the minimum amount if their circumstances in life change.
People think it's the base case, you pay the minimum amount, and very quickly it starts to snowball with the interest. In the stories you saw, why were people using credit cards in the first instance? We think people use credit cards for the little extras in life, but actually some will also use credit cards for some of the, their fixed cost and stuff like that. Can you comment on what people are buying with their cards?
Over the past 5 years, we have seen people use their credit cards more and more to pay for essentials rather than the little things in life that they enjoy. So I think, broadly speaking, overall, people are using their credit cards not just for what we might associate with impulse purchases, but they are also using them to pay for food, to pay sometimes for their energy. And sometimes people are also putting their buy now, pay later debts onto their credit cards too. And I think that's only going to grow and grow as a phenomenon. And in a sense, that creates a new shadow debt. And it's something I'm definitely interested in keeping an eye on because I think that's bound to become a bigger and bigger area. So it's a myth that essentially anyone that ends up in credit card debt is only in that situation because they've overspent, that they've lost control and they don't have discipline. Very often it is because they are already living in a very precarious um, situation where they do not necessarily have enough income to cover all of their basic expenses. And that's when they start leaning on credit cards. And that's why a lot of people really, really prioritize protecting their credit score, even if that means making credit card repayments at the expense of, paying for other basics in their
Yeah.
life. And that's a real flaw in the system at the moment, that so many people are being encouraged to prioritize their credit card repayments at the expense of those other basic, needs. We need to look again at what kind of affordable credit is available for people so that they don't end up feeling that they have no choice but to kind of, yeah, essentially stretch themselves to cover those credit card repayments in a way that causes them real problems elsewhere in their life.
And have you seen any patterns in terms of people taking on more, credit card debts? So you talked about maybe, sometimes paying for essentials, impulse spending. Do you think it's also the way the products are designed, where people are going to tend to use a little bit more credit than they probably should?
Absolutely. What we have to remember is that credit card companies don't necessarily want us to pay off our balances in full each month, because obviously, if we do that, then we don't pay any interest.
Yeah, they want to make more money.
They
Yeah,
do.
exactly.
But at the same time, they also don't want us to default on our credit card
Yes.
debts, because then we're not paying the credit card companies anything in that situation. So, what they're looking for is a sweet spot, which is that we are not paying off the balance in full. Maybe we are paying off the minimum or more than that. And perhaps occasionally we might default, but we stick to our credit card obligations. That's what makes the credit card companies money in the long run, because that then means that you, over time, are paying interest that never stops for the credit card company. That is a revenue stream right there that the credit card companies can rely on. So I think what the industry wants us to do is feel like we're in control. It wants us to have this, if you like, this false sense of security, as I said before, that we know what we're doing. And this is why, since I've made the Panorama, that I've been a little bit hesitant when people have said to me, "Well, I pay off my credit card in full every month, and if you don't do that, then it's a mug's game."
Mhm.
And it's just a question of discipline. It's just a question of understanding how the system works and beating the system. And I applaud anybody that takes that attitude, because I think that that is very savvy. But where I'm hesitant to completely um, celebrate that mindset is that it doesn't necessarily create room for empathy. Empathy for those people who behave in a very human way,
Yeah.
which is to take out a credit card and then to find that actually the credit limits are increased, their life circumstances have changed, they're on the hedonic treadmill, they are out and about in our consumer society, they see that pressure to keep up with everyone else, and they slip and they end up getting into more and more credit card debt. It's a tale as old as time, and it's one that anyone can be vulnerable to. There is also that risk, of course, that if your life circumstances change, then you are no longer in control of your credit card debt. And if we're talking about borrowing over 18 or 24 months, then your life can change a lot in that time. So I do think that we always need to be careful about thinking that that could never happen to us, because it could do. And the only way that we can really guard against that is being aware of just how real the risks are.
Yeah, and really understand the system and what you're putting yourself into as soon as you actually get a credit card or you
Mm,
get a second credit card.
mm.
Um, and did you notice people were, on paper doing everything right? So you're talking, maybe you think doing the minimum repayment is okay, maybe, transferring the balance but still struggle to get out of debt?
Yes, I think you mentioned balance transfer deals there. That is another trap. And it's one that has prompted a little bit of soul searching from me in recent times, because I think financial journalists have long touted the 0% balance transfer deal as a panacea for anyone that's in credit card debt. Don't get me wrong, it can be a very helpful
Yeah.
tool.
Yeah.
But you have to step back and ask, why are companies offering these deals? And it is because a very high number of people do not clear their balance in the interest free period. And so by that point, at the end of, say, 18 months or 24 months, and as I said before, a lot can change and a lot can happen in that time in someone's life. If they haven't cleared that balance, they start paying interest. then psychologically, a lot of people might just think, well, there isn't really much point here in me trying to pay off what I owe again. I am just going to stick with this, keep this ticking over, and I'll sort this out another time because the balance transfer deal has just not worked for me. And sometimes that is because these deals are given to people with such big balances that they don't really have a realistic prospect of paying off what they owe in that time. So it's doomed from the start. And I wouldn't say that's true of everyone, but I certainly think that's true of a lot of people who do take out these balance transfer deals. And again, it's about human psychology. We can start with the best of intentions, but then we realize actually, we're going to have to pay X amount off per month over 18 or 24 months. People can struggle to understand what that really means in terms of the impact on their day-to-day life, how much budgeting that would require, how much they'd need to cut back their spending. And they get no help with that either. The customer has to take all of that responsibility onto themselves to make that deal work for them. And of course, if you are really, really committed, perhaps because you have been in credit card debt for years and years, and you've decided now is the time to address this, then of course you can make inroads. Of course you can pay off your credit card debt. There's so many brilliant inspirational stories I've seen out there of people who have paid off their credit card debt. So it is possible. But I do think that the balance transfer deal can sometimes be a bit of a mirage
Yeah.
in that journey. And lots of people who do eventually pay off their credit card debts do say to me, in the early days, I was seduced by the idea of a balance transfer deal, but it didn't necessarily work out for me.
Yeah, because it's not necessarily part of the plan. It's also maybe a last-minute band-aid, type of solution. It's an emergency, and you're like, okay, I'm just going to do that, and I hope in 2 years' time, my situation is going to be better. But that's quite tricky.
Yes, we're very poor generally as human beings, all of us, every single one of us, at thinking about what will be best for us 2 years down the line, let alone 5 years or 10 years or 20 years down the line. We're much better at focusing on what's in our best interests right now.
Mm.
And the skill of personal finance in a way is always having one eye on the future and thinking about how you might feel about a particular situation 2 or 5 years down the line, which is exceptionally hard, not least because we can't actually predict what will happen to us and the
Yes.
wider world in the future. So it's an imperfect art, but nonetheless, just having that future awareness in mind is really critical, especially when it comes to debt.
This episode is sponsored by Money Week. Money Week is a weekly financial magazine written by great journalists, and it's one of my favorite ways to stay on top of money news. More than 20,000 people read Money Week every week in print and on the app. You get investment ideas, market news, economic trends, and practical guidance on things like ISAs, pensions, and savings, all in one concise and jargon-free format. You can try 6 issues for free, then the Wallet listeners get an exclusive £5 discount on a quarterly subscription. Visit moneyweek.com/wallet and enter the code WALLET. And you've talked about credit limit. So I think something a lot of people experience is when you're starting to repay your credit card on time, your credit card company tends to increase your credit limits. And you may have credit limits in the, five figures sometimes. So why, how does it work in practice when you're using a credit card in terms of, getting a bigger credit limit, and why is that dangerous?
I would say the credit limit was the number one contributing factor to the persistent credit card debt problems that I saw when I was researching and making this Panorama documentary. It was present in all of the case studies that we spoke to, and it was often the trigger for people spending much more on their credit cards than they would have done otherwise. So, automatic credit limit increases, you can opt into them, you can opt out of them. So, we do now have a choice about it. That wasn't previously the case, but a few years ago, the financial regulator, the Financial Conduct Authority, said no, we cannot have a situation where people cannot opt out of these automatic credit limit increases. So that's a positive, but still, many people are not aware
Yeah.
that opting out of those credit limit increases is a really, really savvy thing to do. Because again, we might think of ourselves as being, intelligent enough and disciplined enough to resist that temptation to spend more. But it's not really about discipline or intelligence. Again, it comes back to human psychology. And it also comes down to this slightly complex relationship that we have with our credit card lender, whereby we are given the impression when we have an automatic credit limit increase that actually it's because the credit card lender thinks that we can afford
Yes.
to borrow more. And ironically, this will happen often after people have been using their credit cards very well for a period of time. Then their credit lender will say, well, why don't you have £8,000 of credit? Why don't you have £10,000? Why don't you have £12,000? And in your brain, you think, well, I'm good for this money. I can afford to borrow more.
Yeah.
My credit card lender says I can. So what's wrong with that? But your lender's not necessarily giving you that credit limit increase because it thinks you can afford to borrow more. The reason why it's doing that is because I wouldn't go as far to say that it's hoping for this, but it's not going to be against the possibility that this will make it actually harder for you to pay off your balance in full, and that you might then end up only paying off part of your balance or making the minimum repayment. And therefore, you have to really interrogate why the credit card lender is giving you something that seems very generous and seems very positive. But for so many of the people that I spoke to for this documentary, it turned into anything but a positive and anything, um, but uh, an approval. It actually became a bit of a nightmare for them because ultimately they then ended up spending more and getting into more debt. And that's when things got out of control.
Yeah. And it's again the individual responsibility versus the financial institution. So it's you actually opting out of the system if you want something better for your personal circumstances. So now for someone who doesn't have a credit card and think, I want to start building my credit score, do they need a credit card? And what are some of maybe the pros and cons of credit cards? Because they could still work for some people.
Yes, I think credit cards are a fact of life, and also credit scores are a fact of life. And I would say that where having a credit card is potentially optional in modern life, um, completely ignoring your credit rating is not. Because unless you intend to live off the grid for your whole life and not have any kind of major loan of any kind, then you will need to pay some attention to your credit score. This doesn't necessarily mean signing up with a credit score provider and paying for a subscription. Um, you can access information about about your credit report for free. You can access that for free, and you can find ways to access your credit score, which tells you what's in your credit report and gives you a kind of simple score, about what's good and what isn't good, so that you can then make some changes. And some of those changes can be very simple, such as getting on the electoral register. It doesn't always mean taking out a credit card and paying that off in full every month. So obviously, if you are perhaps somebody who has an underdeveloped credit history, that is a pretty quick win. I say pretty quick, but say over a year or two, you would see results quite quickly from doing that. The problem is that lots of young people, especially, are quite credit phobic because they know people who've got into problems with their credit cards. And as a result of that, they don't want to borrow on a credit card. And it's a very, very understandable feeling. And for those young people, having, say, a phone contract, for example, could be a perfectly good alternative to having a credit card, and just getting the basics right, paying all your bills on time, every month, month in, month out, year in, year out. That will definitely help your credit score as well. So I do think it's a bit of a myth that it's absolutely essential that we have to have a credit card in order to have a good credit score. That said, there are plenty of situations in which having a credit card is going to make life easier. One example is that I incur a lot of expenses through my work. There is no way that I'd be able to pay for those outright from the income that's in my bank account. So I use a credit card. I treat it as a business credit card. I then, factor that into my tax return because obviously I can, claim back expenses on my tax. So, having all those there on a credit card helps me do that. That's a fairly niche example, but there are other examples where people would be using a credit card in a perfectly legitimate, responsible way. And of course, there is something called Section 75 protection. So this was introduced in the 1975 Consumer Credit Act, I believe. And this essentially means that you get protection if you make a purchase worth over £100 on a credit card. And if anything goes wrong with that purchase, and the company that you purchased that item or service from isn't playing ball and isn't cooperating, you can go to your credit card lender and ask them to give you a refund instead. And that, generally speaking, is seen to be more robust and is seen to be better than the protection that's offered on debit cards, which is known as chargeback. So, again, the advice that we give an awful lot as financial journalists is if you're making a big purchase, use a credit card if it's over £100, because that way you get consumer protection. So I do feel torn about that, to be honest, like I do when I talk about balance transfer deals, because I know for a lot of people that that means they feel they have to then use credit cards, and that puts them in the way of temptation and danger. And there are people who have been in credit card debt in the past and don't want to lapse either back into it. So it just goes to show that there are so many aspects of the modern consumer economy that require us to always be vigilant if we want to make these tools work for us.
Yeah, and educate yourself, learn about these tools, and you're right, checking it. Is it the right thing for me? Is it the right card for me? Now, for those who actually have credit card debt, I feel it's really hard to talk about that. There's still a lot of shame around these topics, and you've seen that in the documentary. People may feel very lonely, they feel isolated, they don't know where to find help. What could people do if they feel, they're struggling with their credit card debt or any like short-term debt?
That's a really good question because it reminds me of just how vulnerable some people can be, especially if they're having mental health problems. One of the case studies that we spoke to in the Panorama documentary had bipolar disorder, had gone on a spending spree during a manic episode, and then had found his credit card provider had increased his credit limit once he'd started to pay back his debt using a loan from his parents. The most important thing that anybody who is struggling with credit card debt needs to know is that help is available. And people worry that if they seek out that help, that then they will be put onto a debt solution and that will then affect their credit rating. It will really restrict their life, that it will involve a lot of pain and sacrifice. And these are all really, really understandable concerns. But I would say the alternative is being in the credit card trap. And that's not a way to live in the long run, because not only are you going to be handing thousands and thousands and thousands of pounds over to your lenders that you do not need to in the long run, but it's also going to weigh on you. I think it's so difficult to convey sometimes the sheer mental anguish and burden that people carry when they have been in credit card debt for many, many years. And it doesn't have to be tens of thousands of pounds. It's all about what you as an individual feel comfortable with. Even if you're just a few £1,000s more in debt than you would like to be, that's still going to feel quite horrible. And it's still going to cause you potentially sleepless nights and make you not want to open your post and make you constantly feel on edge. So living like that, it's horrible. And therefore I would say speaking to someone about your debt, as difficult as that might be, will first of all help you understand you're not alone, that there's no shame. We've talked today about how common these problems are, how so many people are going through them, that it's not a reflection on your character or your personality or your intelligence, that it's just a function of what it is to be a consumer in our modern economy. And getting that help will then allow you to access practical solutions, some of which are, not necessarily going to be incredibly costly and going to be a massive burden for you, but that will put you on a path towards, making inroads into that debt and get you back on track and get you to a place where you can start to live again and you can be freed from that burden and that worry. And as someone who's never been in chronic credit card debt, I've had to work really hard at understanding the barriers that people have in their minds mainly when it comes to seeking help,
Mhm.
because it's just the easiest, most pat thing for me to say, on TV or in my journalism, go and get help. Why don't you just go and get help? You know, having sat in on those conversations that, debt advisors have with their clients, having heard those initial phone calls when I've been allowed to kind of listen in on those by debt charities, you understand what it takes for people to come forward and get that help. It's just so not easy. And I have nothing but respect for people who do that. And also take heart from the fact that there are so many influencers now who have shared their journeys of getting out of debt,
Yeah.
who have done it through, various methods that they're now opening up about. And, that inspiration is out there for you as well. And that there is light at the end of the tunnel.
Thank you, Iona. If you were, I mean, that's a big question. If you were to redesign the system for people to access credit through credit card, what are the main things you would change?
This is just my own view, but I do wonder whether it's right that credit cards offer greater consumer protection than debit cards. Now, somebody listening who works in the banking industry may be able to tell me why that's the case. But from my vantage point, I'm struggling to understand the reason for that disparity. And I think that disparity may be inadvertently causing people to take out credit cards when they don't need to, and therefore putting them in danger of getting into credit card debt, when actually people should expect the same level of consumer protection when they use their debit card. I also am not a massive fan of raising the contactless spending limits on either debit cards or credit cards. I understand the economic reasons for doing it, and I suspect that's the main driver of that decision to remove the limits on contactless cards. But again, I think that is a big contributor to people's
Mhm.
spending problems and therefore their credit card debts. Um, and I would also definitely encourage credit card lenders to be much more upfront with their customers about the need to get help if they're in credit card debt. As things stand, we have a situation where somebody might be really, really, really doing everything they can to keep up that minimum repayment on their credit card. And they're struggling in the rest of their life and they're just about keeping their head above water. And they're not necessarily getting that message from their credit card lender. It doesn't have to be this way. This is clearly a sign that you are in debt that you cannot afford. And therefore, a solution needs to be put in place. Now, I understand that the credit card lenders might not see that as in their interests to signpost people to that help. Um, but I think a lot of banks want to talk the talk when it comes to corporate responsibility, but you've also got to walk the walk. And what that means is treating your customers fairly. And we have consumer duty now, which means that actually the financial industry does have a regulatory responsibility to its customers. And therefore, making sure that those customers know where to get help and encouraging them to get that help when they get into trouble. That to me is a no-brainer when it comes to consumer duty.
Thank you very much. I have 3 quick fire questions for you. One common myth about credit cards.
That you need a credit card in order to get a mortgage. I've met plenty of people who've got mortgages without them.
Yes. One red flag in a credit card statement or app that people often ignore.
That option to opt in or opt out of automatic credit limit increases, you should always, when you're taking out a new credit card, opt out. Even if you think you're really smart, you've just got to be careful.
One simple habit that best protects people from getting into trouble with credit.
It's simple and boring, but true. Budgeting. Fundamentally, if you have an awareness of what's coming in and going out, everything that you spend on your credit card will be accounted for every month and you can pay off that balance in full and then you can be a winner.
Amazing. Thank you so much, Iona.
Thank you for having me.
Thank you for joining us today on The Wallet. If you're enjoying this podcast episode of The Wallet, make sure you subscribe to the show on YouTube and any other podcast platform. We also share short clips across social media at Vestpod, and you will find the key takeaways and resources from this episode at vestpod.com. To go deeper, subscribe to the Vestpod newsletter link in the show notes for practical money insights, episode summaries, and upcoming events.